And welcome to the FT's live business clinic, coming at you from my living room. I'm Claire Barrett, the personal finance editor at the Financial Times. I'll be joined today by Andy Bounds, the FT's enterprise editor, and we're going to be talking about the hot topic in the news, the bounce back loan. Now, this is the UK government's latest way to help millions of small businesses and the self-employed potentially cushion the blow from the coronavirus pandemic. They can borrow quite a lot of money, up to £50,000 in some cases, in a 100% government-backed loan, which they won't have to make any repayments from for a year. The interest will also be covered for the first year, and it will be quite low after that, 2.5%. Now, the scheme launched in the UK yesterday morning. There's already been more than 100,000 applications from small businesses, and we want to hear today from you. Are you able to get through to your bank? Certainly some of the early questions that we have got from FT readers already concern that kind of thing. Or perhaps you work in banking, maybe for an alternative lender, and you're worried about how these government loans could impact on your own business book going forwards. Well, as ever with these videos, which we're now doing every Tuesday at 12 noon, you can ask us a question either by posting in the article if you're watching on ft.com, or in the comments field if you're watching on YouTube, or if you're watching on LinkedIn. Hello to all of our new followers on LinkedIn. You can also post a question for us there, and the marvellous FT production team, hello Alice, will be able to flash it up to me on my iPad, and I can put your questions to Andy. So let's start off then, Andy, with some questions for you. Can you give everyone watching just the lowdown on how these new loans actually work?
They're very, very simple, which is the whole idea. There was an existing loan scheme called the Coronavirus Business Interruption Loan Scheme, quite a mouthful. That started, you could get a small loan from that, but it also went up to £5 million. And the banks only got an 80% guarantee. So they had to spend a lot of time vetting applications. You had to fill in a lot of documentation to get the loan. And, you know, to date, that's been a very slow, cumbersome process. And small businesses felt it just wasn't worth their while often, or they would be getting turned down. So this is an addition to that. And it's supposed to be very easy. You go to your bank's website, you fill in a short form. People have told us it's, 5, 6, 7, 7 pieces of information. You just self-certify that your business has been impacted by coronavirus. And in some cases, banks were saying the money was in the account yesterday. So they applied in the morning. A few lucky 100 people got their money the same day. Others should get it within the next 48 hours.
Crucial thing about this loan scheme. For so long, while we've been covering the coronavirus business interruption loans, or SIBLs, SIBLs 40, as they've been called in the past, it's the small businesses that have really been having to wait for that money to come through. Now, one question that's already been asked that we'll come on to in a minute is from somebody running a small business who's applied for a SIBL and is now wondering if they should go for the bounce back loan. But the fact that the money is hitting businesses' accounts so quickly, combined with the advantageous terms, means that for many businesses with the correct requirements to apply, if they're only looking for up to £50,000, then the bounce back loan is undoubtedly the better and quicker and possibly cheaper option for them.
Bear in mind, you can only borrow up to 25% of your turnover. So if your turnover is £200,000 or below, the bounce back loan is probably the one for you. In fact, many banks were saying yesterday they will be proactively moving people who have applied for CBILS under that amount or under, just transfer them to the bounce back loan. People who've already got CBILS for that sort of amount will be proactively asked if they'd like to transfer to a bounce back loan. CBILS interest rates vary because it's up to the bank, but obviously the bank's not getting 100% guarantee, they're getting an 80% guarantee. So the interest rate will be higher than the 2.5% of the bounce back. So it's definitely worth your while going for a bounce back if you're only looking for that much money. That you can't have both. So if you're looking for more than 50,000, then I think you do have to go for the CBILS. Banks at the moment involved in the program. Others are trying to join because it was set up in such a hurry. Most banks are just saying, if you're a customer of our bank, apply. HSBC is the only one at the moment which is welcoming people from other who have accounts elsewhere. That doesn't stop you going to a Santander or Barclays and opening an account, but obviously that's going to take a week or two. The usual money laundering checks, the usual know your customer has to be gone through. So you're not going to get, jump the queue that way. But if you're already an existing customer of one of these banks that's doing it, then it's easier for them to know that they're more likely to give it to you than turn you down because they know you.
Absolutely. And one thing that some of my followers on Twitter, if you want to follow me there, I'm at Claire B, was pointing out last night is that he already banks as a sole trader with a bank, but he only has one account, which is his business and his personal account. And the bank in this case has told him, well, you've got to open a business account before we can grant you this finance. And they've said it's just a precondition of the loan scheme. I mean, probably a good idea to have separate accounts, but sole traders don't have to do that. And a lot of the time, if you've got different charges, often business banking, it can be more. So, I mean, Andy, let's also talk before we move on to the reader questions, because there's quite a few coming in. If you want to ask one, either put one on the bottom of the comments field in the ft.com article, it will flash up on my screen, or you can comment on LinkedIn or on YouTube, and it will also get sent to me. There are quite a lot of concerns building up about the scheme because it is proving so popular and because the money is flowing so freely. Lots of FT readers are worried about how fraud will be dealt with.
Yeah, it's an interesting question. There's 100% government guarantee. The banks are not testing whether you can repay this loan as they do with the CBILS and normal lending. Therefore, there will be lends made to people who won't be able to pay it back. The bank does have to pursue, try and pursue the money before it can claim the guarantee from the taxpayer, from the British Business Bank. But they can't take a house, they can't take a principal private vehicle. So it may be that if a business goes under without many assets or just stops trading and can't pay the money back, it will come back to the taxpayer. The other thing to recall is that the 2.5% interest rate for the first year will be paid by the government as well. So if we've got, let's say, as of today, there's probably over 4 billion been lent out. The average lend at the moment is about £30,000. So 2.5% on 4 billion over a year, and that 4 billion will go up. We're already talking tens of millions that the taxpayer would pay even without any fraud, and obviously fraud could come on top of that. Now, we're asking the Treasury, what measures they're putting in place to prevent fraud. But we haven't heard back yet, but obviously we'll update as and when we get it. And I think we'll probably be doing a story later in the week about the checks and the fraud checks that are being put in place.
Well, let's move on to some of the questions that are coming in. I'll start you off with a couple of easy ones, just the general questions about how the bounce back loan schemes will work. FT reader, the supercar buyer, like your profile name, asks, does the government cover the interest rate on the loans for the first year? What is the interest rate for the following years? And do different banks have different interest rates? Over to you, Andy.
Oh, thank you very much. Dead easy. So there are not different interest rates. Everything's 2.5%. The government will pay the first year's interest for you, and then it's up to you, and you can get the loan for up to 6 years.
And also nothing for you to pay back at all within the first 12 months. The first repayment won't be due until 12 months after the loan has been granted. Second one, another nice and easy one. FT reader PGZ asks, is it possible to apply to the coronavirus business interruption loans after you've received a bounce back loan? We need the money now, and bounce back seems quicker, but our business still needs more than £50,000.
That's a fascinating question. I mean, I think that's probably one to talk to your bank about. I mean, as I understand it, you shouldn't really have both. But it may be that your bank will say, here's 50,000 bounce back. You go through the CBILS process and you could convert the 50,000 as part of your CBILS. That would seem to me a logical way forward, but I would have a conversation with your bank about that.
Okay, another FT reader with a great pseudonym, Rosie the Riveter. We can do it. She says, Andy, I've been through all of the application forms on all of the 10 participant lenders so far, and I cannot access this scheme because of the completely random fact of who I currently bank with for business purposes. Now, we should say at this point, there are some banks that won't be offering this at all, but there will probably be a pool of around 50 lenders who are currently doing the coronavirus loans who will eventually offer these. But Rosie says, it takes an age to apply for a new bank account, so switching my business account is therefore problematic and would leave me vulnerable to all kinds of charges from another bank. So what should I do? I mean, Andy, how long do you think it's going to take for some of these other lenders to become accredited? I understand that quite a few of the banks are getting pretty cross at how long it's taking them because they're worried about losing business themselves.
Yeah, I mean, I really feel for Rosie there because it is a dilemma. The only one we know of which is saying by the end of the week it will be up and running is Starling Bank. Others are in the process. We had an email from an outfit called Tide this morning, which is an alternative finance lender. They wouldn't require you to have a bank account with them because it's not a bank. A lot of these lenders are not banks. So therefore, you can get the finance from them, but keeping your account where it is. The problem is that they've got to jump through the hoops of the accreditation process, which is administered by the British Business Bank. And to be fair to them, I guess they thought, the 10 biggest banks have the most customers, they have the most capacity to deal with this. We're going to give them the green light first, and then we're going to, make our way through giving the others a green light. So it's probably, as I say, Starling Bank will be one option. Later this week, you could ask around other lenders. Other lenders might, Google around a bit. Whereabouts offer bounce back loans, and see which ones are coming forward. Because as Claire said, there are 50 on the CBILS scheme, more than 50 now. So you'd expect a lot of those to be doing bounce back as well.
Okay, now slightly different tack here for you, Andy. FT reader Jerry F. He is asking about businesses which are eligible and ineligible to apply for the bounce back loan. Now, he says, I operate a members social club, which is registered by the FCA as a mutual. We are experiencing a similar tone from banks and lenders so far that this scheme is for limited companies only and that non-profits are not eligible for lending. Will the bounce back scheme open this up to our business, which, as I said, is a members social club? Maybe a bit of a specific one to answer with any certainty on this video, but in general, Andy, there are some notable exclusions of the types of businesses who can apply for the bounce back.
I'm just looking at our excellent explainer, which we ran yesterday to refresh my memory. But I don't remember seeing anything about mutuals not being allowed to get bounce back loans. Certainly, certain financial services companies can't. Certain schools and charities and so on can't. But I wouldn't necessarily see why a mutual couldn't. So it may, if you haven't asked, it's worth asking with your bank. Certainly, there are some vague restrictions as well on certain small areas like agriculture and fisheries because of European Union rules, but they're quite specific. So, the intention is certainly every trading business should be able to access this. Is government's intention. So it's worth clarifying and maybe go to the British Business Bank, go to the source and say, am I eligible for this stuff?
We'll also put the question for you, because one of the reasons that we like doing these videos is because me and Andy can hear directly from you, our readers, what kind of questions you want the FT's journalism to answer. So even when we don't know the answer to some of your questions, it's still very helpful. And I'm going to turn to our YouTube live feed for a second. We've got quite a few people who are on the YouTube asking for some follow-up questions, what we've already been speaking about. A reader called PG, I don't know if that's PG Woodhouse or PG Tips, but he says, Andy, can you please elaborate on how and from where is the bounce back loan facility available through alternative lenders like non-banks? Well, certainly there are a couple that you mentioned in your article yesterday.
Yeah, well, at the moment, it's not available through any, but, we know people are trying to get accredited. So you may have to wait a few days. And then if you go on the British Bank website, it gives a list of everybody that's accredited to and a link to their sites. So you have to be a bit patient, but there will be more, as the weeks go by.
Circle, you were saying, is one lender that's hoping to offer it?
Yeah, I remember they were certainly doing the CBILS. I haven't personally checked on the bounce back, but it would surprise me if they weren't. But one slight problem some lenders have with bounce back is that 2.5% interest isn't an awful lot. Whether you actually feel there's a market for you here, that's worth doing.
I'm going to go to another question now from the YouTube live feed, which comes from David Ball. Hello, David, wherever you are. He says, hi, Claire and Andy, can you apply for more than one loan if you are a sole trader and a limited company? And then he clarifies that point by saying, I meant, can you apply for more than one bounce back loan as a sole trader and as a limited company? I suspect that the answer to this is going to be no, but then I suppose it depends how many directors the limited company perhaps has and who's applying for the finance and whether the businesses are connected.
I think the thing we love about these is we keep getting questions that we haven't even thought of, which just shows you how complex these are, when applied to real businesses. So I would probably agree with Claire. I think it's probably unlikely, but not impossible. And probably the only way to find out is to give it a go. I mean, I've seen nothing, saying you can't, but then again, I've seen nothing saying you can. So I guess the bank would decide whether they feel that's within the qualification rules or not.
Thought that if you were the sole director of a limited company and you were also applying under your own name as a sole trader, that would be too close to the bone. Although, David, you do raise a very interesting point, which is, how quickly can the different banks, check all of these things and share information, because there's such a hurry to get the money out to save businesses that have been starved of cash flow since the lockdown in the UK first started just over 6 weeks ago. That there is going to be a process of kind of reconciliation, and with no repayments due for 12 months, none of these loans are going to go bad before then, because nothing is owed. So there is going to be a period of time of playing catch up, checking all of these things, one assumes.
Banks yesterday were receiving a request every 2 seconds, most of them, and they're trying to get decisions made within the day or 2 days. So with the best one in the world, they're not looking to say no. They're not looking to cross-check. They're looking to get money out the door. That's what the government's tasked them to do.
It's from YouTube, and then I'll turn to some questions on LinkedIn. Hello to all of our followers on LinkedIn. It amazes me that so many people from around the world are saying hello to us. We all say hello back to you. But to stick with YouTube for a second, a very good question has come in from, she says, and now she can't see it. A very good question has come in from somebody whose name I can't see. Oh yes, Frank Martin. Here we are. Sorry, Frank, I had clicked on you and it had made you disappear. Can you use the bounce back loan to refinance other commitments within your business? Well, I think certainly from the response to our piece yesterday, this is what an awful lot of small companies are intending to use the bounce back loan as a cheap means of refinancing and pushing out the liabilities on perhaps other borrowings or vehicle hire, equipment hire commitments, that kind of thing, Andy.
You can indeed do that, yeah. And I think a lot of people will do that. Why wouldn't you? 2.5% interest. The question then is, as we were saying earlier, some bank lenders who aren't on this scheme might start losing business because, people will transfer the lending to the bounce back scheme. But, that's partly what it's there for. It's offering a relief. So whether you need the money now, or you might need it in 6 months, or you can, reduce your repayments on another loan, that's the intention of the scheme. Cut your costs so you can get through coronavirus.
One question that we were being asked on the last video a week ago, before the rules of the scheme were known, lots of business viewers were saying, well, could I get the money under the bounce back loan scheme, sort of hang on to it in case I need it if things get worse or take much longer to get better, and then pay it back early?
There's no charge for early repayment. So you could do precisely that. Yeah. So a lot of people will be getting this as rainy day money, because it's useful, it's cheap, and it's actually free if you only keep it for a year.
And then one final question. This is another easy one for you, Andy. Are you able to apply for a coronavirus business interruption loan and a bounce back loan?
Yeah, I think we covered this earlier on, which is that you can only have one of the two, and yeah, a lot of banks are moving people who've got the C-bills 50 grand and below. They'll proactively move them onto the bounce back because it's better for them.
A couple of things that we'll follow up with later in the comments of both LinkedIn and YouTube. People are saying, can we list all of the lenders who are offering the bounce back loan so far? Certainly, it's mostly the high street banks, but we will provide you with a list of all 10 in the comments field by the end of the video. And people are also asking for the link to the Q&A we wrote yesterday, which we will also post for you. So now I'm moving on to the questions from LinkedIn, and thank you again for this one. Kobi Azzy, who says, Ken Ofori-Atta, who is the finance minister for Ghana, wrote in the FT on how African countries do not have any contingency funds to fall on to cushion businesses. How do we see to it that businesses all over the world are cushioned in these troubled times to tackle looming global poverty, since if left attended, the effects will spill over to richer countries? Well, a really interesting question from you there, Kobi. I would also like to say all of the people who are watching us around the world in different countries, do comment with what your countries are doing. Even if we don't get to discuss it on this video, we may well come back to see in a future video about how the UK's packages are comparing to the rest of the world. Certainly, Kobi, I know that the World Bank is incredibly concerned about global poverty, which has been something that they've been working on to reduce for many years, and it is now sadly almost certainly going to go into reverse, and there's going to be terrible effects for the third world, and like you say, that is going to knock on into developing countries. But I mean, Andy, do you have any thoughts on the question that's been posed, the issues raised there?
I think you're right that we have to be multilateral institutions that provide the finance, because obviously it's better to keep businesses going than to end up paying, benefits to people who have lost their jobs because businesses haven't been. So at some stage, money will have to be paid back that the government is spending on all these measures, which include, funding for self, which will have to be paid back. Even rich countries are struggling with this. Obviously, it's much harder for poor countries, and they need help from rich countries, just as those rich countries are finding it. They haven't got, they're spending big commitments. So, I know the UN, the World Bank are raising money for various coronavirus measures, and this will, you would think, be one of the most important.
Credit checks on the bounce back loans. What would cause a bank to say no to an application? It sounds like a pretty much certain approval, yes, so rapidly in the case of the people who are expecting to get money or have indeed already received it. So the bank would obviously have a good idea of your business and who you are. But in reference to the need not to perform a proper credit check or your bank account, what do you think could cause a bounce back loan to be denied?
Well, I think these forms are almost the rhetorical question demanding the answer yes. That some of us learnt about in school. There isn't very much reason to say no, except certain cases, ones we talked about before. Maybe you've got a business, they can turn you down if your business is a business in distress. So if you've got some kind of county court judgments against you, or various measures that indicate that you're an undertaking in distress. Apparently, some private equity companies could fall into that category because they made losses for many years, by paying off, being turned down. But other than that, and that's mostly on state aid grounds, because you can't be seen to be failing businesses. But in terms of credit grounds, there isn't much reason to say no. That's why the banks have started giving them to customers that they recognise and can see. If they come to them and say, I filled a form out, they will say, well, not no, but do you want to try for a bit less, please? And it's interesting, there's been some moderation going on.
A couple more questions to squeeze in before our time is up. But Amirjit Grewal and the company have shut down, meaning taxpayers pick up the bill. Would directors be personally liable in this case? Well, Andy, you did explore a little bit in your article yesterday about what would happen, or to the taxpayer to pay off. There will be a certain amount of attempts made at recovering it from the person who's taken out the loan, regardless.
Yeah, I mean, they can go after some of your assets, obviously not your main home, not your main car, and it could prove problematic because you can't take personal guarantees. So you're not promising, any of your assets to.
A few comments just before we wrap up. Jahan Kamal on LinkedIn suggests, I think it's better to let the bank or the government hold a share of the business equivalent to the loan amount. Well, that would certainly be a different way of structuring it, although I don't think they could get the money out as quickly if they did that. A couple of readers are asking about whether taking out a bounce back loan issue in coming days. And Jeanette Milligan, a project manager, asking on LinkedIn, is the maximum application 25% of your turnover from which year? It's 2019 turnover.
If you haven't got a full year trading history, it's your predicted turnover.
That is a self-certified question on the application form.
Yeah,
for bounce back loans with Lloyds, but the Barclays online app is down. We've also had some people on YouTube who've been saying that they've been trying through the TSB online application problems. I would urge you, leave us a comment, because we do go through them after we come off air on YouTube, on LinkedIn, or indeed on the ft.com article, and let us know the problems, the challenges that's concerning you as a small business owner. We're going to wrap up now. Join us again next Tuesday at 12 noon. Make a date in your diary. £100, FT's Enterprise Editor. It's been brilliant as usual, Andy. I'm Claire Barrett, FT's Personal Finance Editor, signing off now, and we'll see you next Tuesday. Thanks.